How's it going, everybody? KCG Trades here, and getting right into last week's action. We had a pretty decent week. To start off the week, it was pretty rough. We undercutted some lows, but then moving forward towards Tuesday, Wednesday, Thursday, we had some nice recovery. The indexes tried to rally, so we had a day one of a rally attempt, and now moving forward, we're looking for a follow-through day. Towards the end of the week, we really had some rejection at some moving averages, the S&P, the Nasdaq, the Dow Jones. We all had some rejection at either the 50-day or 21-day moving averages, so that is some worrisome. And we also have some gaps that we need to fill. So I wouldn't be surprised to see more choppiness towards next week. I don't expect smooth sailing, but on the bright side, a lot of leaders are really sticking out. They're really showing themselves, and they're really telling us that, hey, there's some relative strength in the market, and leaders are ready to rip when the market gets going. So there is some bright side in the markets right now. I think it is a very good time to really build your watch list, as I've been mentioning last week. It's still majority cash, but there are still some positions that I put some size on just to test the markets, because there are a few stocks that are doing very well, and you don't want to miss a beginning rally. But these are still early stages in a new uptrend. We are still in the market correction, so we are still waiting for a new uptrend to begin. But with that being said, let's just get right into it, analyze the market, starting with the Nasdaq Composite. All right, so if we take a look at the Nasdaq Composite here, we almost undercut the lows of July on Monday, but we didn't quite do so. Rallied back above, and on Tuesday we had a nice inside day. Wednesday we had another inside range day, and then Thursday we gapped up above that range and got rejected by the 21 EMA. Friday we had another rejection of the 21 EMA, and it looks like we are heading towards this gap fill around 14,496. So I wouldn't be surprised if we go ahead and fill that gap, because majority of gaps do get filled, especially on the indexes. And right now we are still pretty weak. The overall indexes are pretty weak. So I wouldn't be surprised to see some more downside movement. Hopefully we could just get that gap fill and rally back above. That would be the most ideal situation, but obviously we never know. The good thing is we don't trade the indexes, we trade individual stocks, and individual stocks are doing very well right now, especially the leaders. So that's really what we want to focus on. So in terms of the Nasdaq, we just have to wait until we could get that follow-through day. Hopefully we could get it sometime this week. Follow-through days usually happen between the 4th and the 7th day of the first day rally attempt. So now we're on this was day 1. So we're on day 3, day 4, I'm not 100% sure. But it should be coming this week if this rally is sufficient and legitimate. So we got to pay attention to that, and we really want to get above the 21 EMA, get above this downtrend line here to start a new uptrend. So that's pretty much what I'm seeing with the Nasdaq. Let's take a look at the S&P, and the action is very similar to what the Nasdaq is showing, except the chart is a little bit different. If we take a look at the S&P, it is more of a flagging nature, and if we take a look on Friday, it was only an inside day, while the Nasdaq actually undercut Thursday's lows. So the Nasdaq was weaker on Friday compared to the S&P. But if we take a look at the previous rally attempts, we did get rejected by the 21 EMA. We did get above it, but then we closed below it, similar to what we saw on Thursday and Friday on the S&P. We got above the 21 EMA, but got rejected and closed right on the level. And on Friday, we got rejected again and closed below the 21 EMA. So this is definitely a sign of resistance here for both the Nasdaq and the S&P. So essentially, same thing. We have a gap fill that might get filled. Who knows if it does, but hopefully it does, because we don't want to get that filled later on. Just get that gap fill out the way quickly and then rally back above. That's really what I'm looking for that follow through day. And if we take a look at the Dow Jones, very similar action here. Instead of being rejected by the 21 EMA, we're getting rejected by the 50-day moving average, which is this little dark blue line here. So until we get back above these levels, we're not out the woods yet. It's still a patient waiting game. There's no rush to get back into stocks. However, like I've been mentioning, these leaders are acting very well, which I'll show you later on in the video. And those are the stocks we really want to pay attention to, find the good entries and ride them, especially if we could get into them while the market turns up again. Those are going to be the first ones to rip, and we're going to have a nice profit cushion to let it ride. So that's what I'm looking at, S&P, Dow Jones. If we take a look at other things like the IBD 50, this chart is pretty horrendous after hitting all-time highs on September 23rd. Just been a downhill movement ever since. We did find some support at the 200-day moving average, but the bounce was pretty weak. We got rejected by the 50-day moving average on Thursday, Friday. We did fill the gap on Friday, but it was Pretty ugly candle here, no bounce at all, just a straight downhill day the whole day, intraday. We did end the day off right on top of this old resistance level, so maybe you could turn into support. But for now, for this chart to actually look good again, it will take some time because there's a lot of damage being done to growth stocks. So this is the time a lot of stocks are basing, need more time to just heal and basically get ready for a new uptrend later on in the future. So this is just something that we have to be patient with. There's no rush to it, obviously, but this is part of the game. You know, stocks go up, they go down, they base, they go sideways. It's part of the game. So next thing we're looking at is IWO Russell 2000 Growth ETF. Same thing for the whole year, just going sideways, just being in a huge chop fest. Nothing much to see here until we get a huge direction upwards or downwards. It's just the same thing over and over. IWM, same thing, Russell 2000 ETF, still stuck in this sideways consolidation ever since the beginning of 2021. We do have a little bit of a downtrend line here that would be beneficial if we could get above it. However, we'd still be stuck in this consolidation zone. So like I said with IWO, until we get a move above 234 or we get a move below 211, we're just stuck in this chop fest. If we take a look at the VIX, after having a few spikes to the upside, we are back into the neutral zone around the 50-day moving average. The 18-19 zone is a neutral average zone, so we're not oversold, we're not overbought. The volatility is not crazy. So right now, we could go either way in the markets. We could continue back up, get that fall through day, or we could continue lower. Who knows? Right now, it's just a waiting game, and we focus on the leaders. If we take a look at the ARK ETF, which I also like to look at, right now we're just in a clear downtrend here. We undercut these lows, and then we rally back above. But then now old support is acting as new resistance. So that's the pure sign of a downtrend. So this is something to pay attention to. If we continue lower here, growth stocks could be in for some more downside movement. But that's pretty much it in terms of the overall market. Right now, it's just a waiting game. You know, we just have to focus on the leaders, the stocks that are showing the best relative strength. But if we take a look at the fear and greed index, which I like to look at, starting with the fear and greed index, we're at a fear level of 34. So we're not really getting those extreme levels. We hit it for a little bit, but every time we seem to rally back above and get back to the fear levels. If we take a look at the market volatility, same thing, like I said, neutral. Stock price breadth, we're in fear. Market momentum, extreme fear. Put call and options, extreme fear. Stock price strength, extreme fear. So overall, we're still near the extreme fear levels. And with any market correction, this is also a good sign. When the market's correcting, everyone's fearful. That's a good thing because as an investor, as a trader, you want to be a little greedy, especially as an investor. You want to find those stocks that you really love, that are on a discount, that you could buy for the long term and get at a very good price. And for us traders, especially me, we want to build our watch list, find those stocks that are showing the best relative strength, find those stocks that are just showing leadership in the markets right now and that are screaming that they're ready to rip when the market turns up. So that's what I've been doing, and I have a new list of stocks that I really want to pay attention to and really want to get into. So let's get right into it, starting with the stock AEHR. So this stock is showing us new leadership in the market here. Obviously, this is not a recommendation to buy, but this is definitely one to pay attention to. After going from $3.64 from July 16th all the way to almost $20 as of yesterday, Friday, October 8th, this is definitely one to pay attention to. We have found support off the 21 and 10 EMAs for the past few months, and this is just showing us huge strength, especially when the market is in a correction mode. Like I said, this is not something that we want to buy because it is a bit extended from the 10 EMA, and after its huge run up, it may need some time to just base or just go sideways. But the fact that it's so strong and volume is coming in, if we take a look at these huge green candles, this is definitely one to pay attention to because it's showing us with these huge volume accumulations that these institutions are piling into the stock, and it's something we have to pay attention to. So that's just one to pay attention to in terms of leadership in the future. Next stock is AFRM. So this stock has been on my watch list for the past few weeks, and rightfully so. Just take a look at the action here. It's been very strong, very bullish action here. Two gap ups that haven't been filled just continue to show strength and looking to break into all-time highs above 146.90 here. And the past three sessions have been on huge volume, so that's very good sign of institutional accumulation. If we take a look at the weekly chart, it has this U-shaped look here, and it's about to break into all-time highs. So it has that IPO U-shaped look, and when it gets above above that 146.90 level. I would not be surprised to hit 200 very, very soon because of how strong this stock has been acting, especially if we take a look at the right side of this base, how much volume is coming in and how much institutions are piling into this stock. This is not just a regular investor. It's not just a regular trader. These are big boys, big hedge funds, big institutions piling into this stock. So definitely want to pay attention to. Every chance I can get to possibly get into this, I will be looking to enter because this is the top dog right now. The next stock I'm paying attention to is AMD. If we take a look here, it has this downtrend line here. We broke out of it on Thursday when we had that gap up, got rejected by the 50-day moving average, and on Friday, similar action, got rejected by this level. But we had an inside day candle, so we're still above the 21, still above the 10 EMA. We held this gap so far. If we could continue to hold and get above this inside day level and get back above the 50-day moving average around the 107.28 level, I'll be looking to buy it above that 107.28 and then continue higher now that we broke out above this downtrend line here. So the next stock I'm paying attention to is APP. Now, if you pay attention to the stocks I'm mentioning, a lot of them are almost in all-time highs or breaking out to near all-time highs, while the overall market is making new lows or just flagging downwards in a downtrend. So this shows the disparity between the strong stocks and the overall indexes. That's why we always want to focus on the strong stocks, because these stocks are showing us when the market is going down, these are going up. It shows us how resilient it is, and it doesn't care what the market's doing. So imagine when the tide gets easier, the market continues to go up, and just a nice little uptrend, these stocks will just rip. So that's why we want to pay attention to the strongest stocks. And with APP here, we just broke out of this consolidation above this $80 level, had a nice gap up on huge volume, 5 million shares traded in the day. And on Friday, we had a nice move above Thursday's high, continued higher. And now we're approaching all-time high levels around the 90 level. So I wouldn't be surprised if we could just go up here, get rejected by it, maybe just go sideways by a little bit and then rip higher just so the EMAs can catch up to price a little bit, or maybe even get a slight pullback before ripping higher into all-time highs. This is very similar to AFRM with the new IPO. If we get that little IPO U-turn here, that would be beautiful. Getting above that 90 level would guarantee a move to 100, 115, 130, just because there's no overhead resistance. And as long as the market can cooperate in the near future, I wouldn't be surprised to see this become a new market leader, especially with the nice volume that's coming in. So this is definitely one to watch above this $90 level. If we take a look at the next stock, it is APPS, which is Digital Turbine. This has been acting very well on the 3-month relative scale notice. We hit new lows of 47.57 just in August, but ever since then we've been moving higher. As I've been mentioning, these twin tower volume days have been very significant, and a reason why I'm very interested in getting back into the stock. I did get in from the 64 level and sold it around 73 level, and I just let it continue here. It has been acting well after its nice run up. It's pulled back, found support at the 10 EMA, and then continued higher, got above that resistance zone around the 75, and now we're really looking for a move above this $80.88 level, which is the recent resistance. On Friday, we actually tried to move above it, but it got rejected by it, especially the market was kind of weak, so this is not surprising, but it did act very well. So I wouldn't be surprised to see some sideways action here. This is what I'm really want personally. I would want to see some sideways action, let the EMAs catch up to price, get some tight inside action days, and then boom, above that $80.88 level. That's where I'll be looking to buy this stock, or possibly getting in on weakness on a small pullback. But if we get above this $80.88 level, we have a lot of room to run before we hit the new resistance of the 94.95 level. But this is definitely one to watch, especially because of how strong it's been acting. Ever since the market's been in correction, this has been starting a new uptrend in this individual stock. So that's one to watch. And the next stock is BILL. So ever since it had this power earnings gap up on huge volume, it's held it ever since, and it's just been consolidating and digesting its gains, which is very, very constructive and very bullish. Very similar to what we saw in Snapchat. Didn't undercut these lows, which is a huge sign of strength. And right now we're still above the 10, still above the 21 EMA, which is rare to see in many stocks, especially because the market's in correction. So now we have a nice flag going on here. We did retest the 21 and 10 EMAs and bounced back above it. So if we could get above that 282.76 level, especially if volume can accompany it, I'd be very interested in buying this stock. It has been acting very, very strong, acting very well. No signs of distribution, and it's just been a relative strength leader. So I want to see it get above that level, and I'll possibly be interested interested in buying this stock for a move, hopefully to all-time highs. So this is another stock to pay attention to. And the next stock I'm watching is CELH, Celsius Holdings. So stocks that just go sideways and consolidate while the market is in a downtrend is a sign of relative strength. If we take a look at CELH here, we're just waiting for the market to turn up again. So this stock could hit that $100 level and break into new all-time highs. As of now, we're just consolidating for the month of September. We actually had a nice move towards the end of August towards September, and have just been consolidating ever since. The market's been in correction this whole time, and this has stayed above the 21 EMA and is still above the 10 EMA. So these are signs of strength. We just need to get above this $100 level because that's been a sign of resistance. So for now, it's just a waiting game. Wait for the market to turn up, and once it does, I do believe CELH will rip above 100 and get into all-time highs. Pretty simple, and that's really what I'm looking for. The next stock is CF. If we take a look here, as I mentioned last week, we had a huge rip into new highs on strong volume, and throughout the week, Monday to Friday, we kind of just consolidated and just went sideways, which is understandable because of how strong the move was. And I did mention that we are probably in for some more sideways action, but now I'm really looking for a move above the 6150 line. If we take a look here, we've been rejected 3 times in a row now. We tried to get above it on Monday, tried on Tuesday, and even on Thursday, but we rejected every time. So now we're just waiting for this stock to gain enough strength to get above that level, and I'm looking to enter the stock once again. I wouldn't be surprised to see some more sideways action just for the 10 EMA to tighten up and possibly touch these candles and then rip higher. But this is definitely one to watch because of how strong it's been acting and the huge volume that's accompanying the stock. So the next stock I'm watching is LC. This is a stock I'm actually newly positioned in after its nice gap up here on strong volume. It's just been going higher and higher ever since. We had a nice flag action here off the 50-day moving average, also getting the 10 and 21 all pinched together in confluence. So we had a power of 3 setup as well as a nice break above the bull flag. So it was beautiful, had a nice gap up and hit the 3176 level, but got rejected into an inverted hammer. On Friday, we actually filled that gap, bounced off the 10-21 EMA and continued higher. So on that weakness in the morning on Friday, that's actually where I entered, and I had a nice recovery. So I'm looking for a little bit more tightening action, maybe a 1-2 more days, and then rip higher into all-time highs. This stock has been acting very strong, and for the past few weeks, it's just been consolidating nicely. Now that we broke out of it, let's see if we can continue this momentum and really hit those all-time highs above that 32.75 level, hit all-time highs to 33.30. So this is definitely one I'm paying attention to. The next stock I'm watching is Open Door Technologies. And as we know, with every stock, there's 4 stages to a life cycle. Stage 1 is the accumulation sideways phase. Stage 2 is the advancement phase. Stage 3 is the topping phase, and stage 4 is the declining phase. So sideways up, sideways down, sideways up, sideways down. And essentially, I think we're about to finish stage 1 in Open and hit stage 2, which is the advancement phase. After having a stage 4 decline here, we have been going sideways ever since April, and we've been accumulating. If we take a look here, ever since August, we've had huge accumulation bars showing that there may be some institutions piling into the stock. Huge volume August 12th, August 19th, September 14th, and even on Friday, October 8th. We actually broke out of this resistance level around the $21 level, broke out on strong volume, and we found resistance around the $22.25 level. But I believe if we could get above this $22.25 level, we will start to hit the advancement phase and start to a new uptrend. So this is definitely one to pay attention to, especially because the volume patterns are very significant. Obviously, this will take a bit of time due to the fact there is a lot of overhead resistance from its declining phase. However, if we could get above that $22.25 level on strong volume and continue to act the way it's been acting with new higher highs and higher lows, that's all you could really ask for in a stock, and definitely want to pay attention to. If it could break above that, start a new phase 2 advancement phase, because that's where real money is made. So that's what I'm watching with Open, and the next stock I'm watching is SEC Limited. If we take a look here, this has been consolidating, broke out of the consolidation, and just been flagging ever since. It has been going downwards with the overall market in correction. However, it has stayed above the 50-day moving average, and it's just stuck in this flag here. However, this can go either way. It could just continue to fall down, get below the 50-day moving average, and just continue to fall. However, if we do find some strength in growth, find some strength in the overall market, I do believe this will be a good one that will rip pretty soon, as long as we get above this this flag here, above the 10, 21, and 50-day moving average. And the line of price that I'm looking for would be 332.67. So if we get above that level on strong volume while the market shows us some sort of strength, this is definitely one to watch in the near future. As we know, C Limited, one of my favorite stocks, I'm always paying attention to this, and that's the level I'm really watching for. The next stock I'm watching is Tesla. So this one is climbing a wall of worry in a very controlled fashion. As we see here, we continuously break out of consolidations, go up a little higher, consolidate once again, break out, consolidate once again. So right now we have a bit of an ascending triangle pattern going on, and it has been finding support off the 10 EMA. So essentially what I'm looking for is a break above this 797 level on strong volume, and we want to close above the 797 level and hopefully close above that 800 level. As we know, there's a lot of bullish talk around Tesla, and I wouldn't be surprised to see this rip as soon as the market kind of gets a hold of itself and starts a new uptrend. Tesla is really high on my list as one of those stocks that I'm paying attention to because as we know from previous history how strong Tesla can move and how quickly it can move. So I really want to have this on my focus list because once it rips, we all know it rips. So that's what I'm watching with Tesla. And the next stock is Uber. So if we take a look at Uber here, we undercut these lows around May 13th, and we finally rallied back above after its nice gap up on strong volume, consolidated for a bit, holding the 10 EMA, and we broke out of this recent consolidation of 47.22. Thursday had a nice day on strong volume. Friday, we kind of had an inverted candle, so we tried to continue higher, but got rejected, but it was on lower volume, and the overall market was very weak, so this is very understandable. Right now, it will take some time to break, obviously, into new highs and continue higher because there's a lot of overhead resistance. But the fact that from 38.08 all the way to 48 in the time the market is in a correction, this shows that there is some strength here, and that there are some people piling in due to the fact there's 100 million volume traded in one day. I think they released earnings that day, but definitely one to watch if there's any tradable pattern here to just pay attention to and possibly get in when the time's right. And the next stock I'm watching is UPST. So this one is a clear leader, huge volume accumulation, huge run up, and I don't think it's done yet. After consolidating a bit, finding support after 21 EMA, we do have this flag set up here. We had an inside day on Friday above the 10 EMA, so essentially what I'm looking for is a move above 316.88. I have it mapped out here, 316.88, which is the high of the inside day on Friday. If we could get above that, strong volume can accompany it. I'm looking to get in this stock. UPST has been one of the strongest winners ever since beginning of August, and for good reason. Went from 160 all the way to 346, but I honestly don't believe it's done yet. I do believe there's still a lot of room to run, especially because it hasn't been correcting as much as the market, and the fact that we've been in correction and this has just been going a little bit sideways and still finding support after 21 EMA shows there is huge strength there, huge demand for this stock, and I'm really looking to possibly get back into this stock because, like I said, I really want to get in the leaders. So that's what I'm watching for UPST. And the last stock I'm watching is Zscaler. So Zscaler is very similar to what I saw in C Limited. Has a nice little flag action here off the 50-day moving average. If we take a look here, it did undercut the moving average, but then rallied back above. We did get above the 21 and 10 EMAs, and we tried to break out of this flag here on Thursday, but we got rejected. Friday we had a little rejection as well, but we had an inside day here on lower volume, so that's good to see. If we could stay above the 10, stay above the 21 EMA, and break above this downtrend line here, I do believe this will continue to rip higher. But once again, it all depends on how the market does and how growth stocks do as a whole. For now, it's just a waiting game. We don't want to prematurely enter, because if we enter a continuous downtrend, then we're going to be stuck with a loss, and we want to have the lowest risk possible as well as the highest reward possible. So that's what I'm watching for with ZS. So that pretty much sums up my watch list for the week. As you guys know, I'm really focusing on the leaders. That also sums up my stock market outlook. As we all know, we're not out the woods yet, but pay attention because things can turn around in a hurry. So if you haven't already, hit that like button, hit that subscribe button, share this with your friends and family. And to all my Canadians, have a wonderful Thanksgiving. To all my Americans and everyone else around the world, whoever watches this, I appreciate your support. Have a good weekend. And to all of us, let's have a great week in the markets. Let's kill it. Let's stay safe, and let's make some money. All right, take care. Have a great day.